So what do we look for in a company? There are certain characteristics that we are looking for in the companies that we invest in. We like to invest in companies that are industry leaders. Now, it doesn't have to be the biggest player in its industry, but it has to have a strategic position within its industry, has to have scale, or maybe even a disruptor of various incumbents with new technology or a new better product. These are very good. They tend to sort of be quite strategic and attractive assets for other larger companies looking to grow and acquire them, or maybe new companies looking to enter a new geography and they're looking to get scale immediately, and they sort of tend to look for sort of an industry-leading business. We like founder-led businesses, so businesses where the founder or the CEO or the management team or the board have very large shareholdings and are aligned with the company interests, and obviously with us minority shareholders. We like management teams that have a track record of execution, whether it's with this business or maybe a previous track record with other businesses. And so we really look at that and other sort of incentives of management teams relative to creating shareholder value. We're obviously looking at profitable businesses. So we're only buying businesses that are growing their revenues and profits. And, we're looking for companies with strong balance sheets. We don't mind some debt, but in many cases, the companies that we invest in have 10, 20, 30% of their market valuation in net cash. We are looking for companies that have low market expectations in many cases. And sort of that can lead to quite cheap valuations. It may be a turnaround story. It could be a misunderstood business or basically a small cap that doesn't get much coverage and has sort of been left sort of under the radar. We try and find these businesses, meet with the management teams and understand what's going on before the market can sort of catch on and re-rate the stock. And so we can get in early before they deliver good news or better growth or whatever the situation is. And then very importantly, when we build our portfolio of stocks, we're trying to identify near-term catalysts. So what's going to drive other market participants to re-rate the stock? Because at the end of the day, we don't want to sit in a bunch of cheap stocks that never go up, because that's the recipe for underperformance. So we're really trying to understand, what are the near-term catalysts? Why is that going to drive investors to buy the stock? Could be industry consolidation, strategic reviews, M&A, maybe a trading update, maybe a potential contract win, and so on. So if you really understand that, that's what really drives performance. And that's why, by doing that, we have managed to really perform exceptionally well over the last few years. So, all those attributes that I spoke about, that led us to having 35 or 36 takeovers in our portfolios in the last sort of 5 to 6 years. And that's a lot of companies to get taken over. And sort of the process that we take seems to work and seems to identify companies that eventually lead to a really good outcome for us and obviously other shareholders.